Hey, what is up, guys, and welcome back to another episode of Let's Discuss. Today I'm going to be talking to you guys about ExxonMobil as chosen by you guys on the Twitter poll. It beat out Disney in advanced micro devices, but I wasn't completely surprised because Exxon's really been on a rally for the last couple of months. So I'm excited to talk to you guys about today. For anybody who watches the channel pretty frequently knows I have a very love-hate relationship with Exxon, and definitely I'll share some more in-depth thoughts about that later. But first things first, if you enjoy the video and enjoy my content, please like and subscribe to the channel. If you didn't see already, I did officially publish my raffle giveaway for the Walmart gift card, so check out either my Twitter, my Instagram, or my Facebook to get more details on how to enter that. But one of the requirements is to subscribe, so go ahead and knock that out if you'd like to enter. And those pages can be reached via the links in the description, or they can be searched at bpruitt_YT for Instagram and Twitter, and then for Facebook it's at bpruitt_YT. So a little bit different there, but go ahead and check that out. And then I'm also on another social media. I finally joined TikTok and I made my first one yesterday. It's done pretty well. It's actually exceeded my expectations. So check that out also under the handle at bpruitt_YT. So back here on YouTube, I actually on Monday published my latest M1 Journey video. So check that out if you haven't already. And then last thing before we get into the discussion is I am not a financial advisor. I am not an expert, so please do your own due diligence and research before making any investing decisions. So with that being said, let's discuss ExxonMobil. So guys, a little bit of brief history about ExxonMobil. For those of you who don't know, they are one of the world's largest and leading producers and distributors of oil and other fossil fuels. For many years, even as recently as a couple years ago, they were one of the largest companies in the entire world, and at one point were the largest by market cap. So they're both descendants of John Rockefeller's Standard Oil. They were spun off into Exxon and Mobil respectively, but after several years they actually did end up merging to create one major corporation. So that's kind of where we find ourselves at today. Of course, the game has kind of changed a little bit in the last couple of years with a little bit more focus away from fossil fuels and trying to develop cleaner and more green energy. So that has hurt Exxon to some degree, but they are trying to make strides in combating some of that to kind of change the fabric of their company. And with a lot of mixed results, I will say. But as of right now, Exxon currently trades at $52 a share. They offer an absolutely gargantuan dividend of 6.7% yield annually and a payout of $3.48. Now that yield is still very large, but even as recently as a month ago when Exxon was down around 40 or less, that yield was up at 9% and at one point was above 10%. So a little bit on the risky side if you're dividend hunting, because their payout ratio is above 100%. So that means that they have been paying out over, or actually all of their earnings in recent years, which is, for obvious reasons, not a sustainable model for a business. And I'll kind of address more of that later. But on the positive side, they have established that they are willing and able to pay a dividend throughout any kind of market conditions. As evidenced before, last year they paid a dividend increase for 37 consecutive years. That did come to an end in 2020, but I believe, depending on how they restructure the business, could be something they look to try to reestablish in the future. Now, as far as some of their recent performance over the last 6 months, they have rallied to some degree. They are up 22%, but for the last year they are down 14%. And if you are one of Exxon's more long-term investors of 5+ years, even up to 10 years, you're looking at a decline of about 37 to 38%. So that's kind of to cover some basic information about Exxon stock and their dividend. In these videos, of course, I like to share a couple pros and cons about every company I talk about. So to start with the pros, one thing to keep an eye on, especially that's kind of been in development over the last couple of months, is an increased price for crude oil. Last year, if you were paying attention, we saw a barrel of crude oil get to astronomically low levels. That just was not sustainable or healthy for the global economy, not just for the oil industry. But we have seen it climb as of today to above $60, which is starting to get a little bit on the high side for us as consumers. But for the oil industry, that is a very good sign about their long-term prospects, especially if the demand stays up in a post-pandemic world. So for Exxon to be profitable, it's generally considered a price of a barrel of crude oil should stay between $45 to $50. That's kind of the cutoff for the bare minimum for them to even be profitable. And at these levels, they are definitely more than profitable. So that is one pro to keep an eye on. I know many people probably would complain about that, especially in their pocketbook and at the gas pump. But for them as an investment and as a company, that is a good sign. And then the other pro, I'm going to go ahead and label them as one I mentioned earlier. They do have a strong history of dividends and being able to weather economic storms. So if you are a dividend-oriented investor or you are an older investor who is just trying to draw income for retirement, Exxon is probably still an attractive investment for you for those purposes with that high yield. So unfortunately, there are a lot of downsides to Exxon currently. First and foremost is their massive debt load. Exxon was a company that was increasingly less profitable even before the pandemic, and then when COVID hit, everything just got dramatically worse for them. Like I said, the price for crude oil just basically crashed due to no demand, and it actually got to the point where it was cheaper for Exxon to continue producing at normal levels than it would have been for them to cease production altogether. So they were basically producing worthless gas and other products for really no profit. It was basically worthless. So that, coupled with their already heavy debt load, just made things that much worse. And then the other other con is of course the shift to reusable energy and more green focused world. So this is obviously not going to be good for their long-term business unless they can find a way to really develop more sustainable practices, both in their products and in the way they do things, because they're just going to be really hit hard by government regulations and other societal changes that are not going to be too accepting of the old way of doing things, especially when it comes to fossil fuels and the pollution that is often associated with that. So with those two major hurdles, I'm not sure how long Exxon has to be a model business, especially in the industry. I do think there are definite ways to save it. I'm not saying Exxon is a sinking ship, but I do think they need to cut the dividend at least in half. They need to start bringing some money back into the business to pay off some of that debt and to restructure some of their capital investments towards that more green future and for sustainability purposes. So with that being said, my fair value and my buy rating is definitely going to have to be a hold on the buy rating. If you are a day trader, a swing trader, Exxon probably would be a good one to look at doing that with. But for anyone who is a long-term investor, especially if you're young like myself, I don't know how attractive Exxon looks. They are a great company and have a great history, but don't chase just that yield. I know 6.7% or even higher looks great, to make that on your money, but there's definitely a lot of risk of losing that capital that you invest, especially with the conditions that are now. So I only feel comfortable giving them a buy rating if they drop down significantly back in the 30s maybe. So, and even I think this is generous. I'm going to put their fair value estimate at $45, which is about $5 to $7 lower than they currently trade. And even I think that's a little bit generous. We could see Exxon climb up even to the mid 50s before it descends back down as crude oil continues to increase in price. So again, be on the lookout over the next 3 to 6 months to see how things play out. We could see Exxon continue to rally for another couple of weeks, but I think it's highly unlikely that it sustains these levels for a long period of time without real fundamental change within the business. So again, yeah, my final thoughts is that if hold for the next 3 to 6 months, kind of let it play out. If you have it, don't sell it, but if you're looking to get in, now's probably not the best time. So with that being said, guys, I hope you enjoyed the video. Please drop a like if you did. If you have some of your own thoughts, share those in the comments. And if you enjoy my content and my other videos, go ahead and subscribe to the channel. So I will be making another video on Monday. And in the meantime, check out those social media pages to join the raffle giveaway. And I will see you guys on Monday.